When it comes to what I call the basic necessities of insurance, why people use insurance, you could almost argue on a day in, day out basis the most. You're talking health insurance 90% of the time. That yes, I have auto insurance, but unless I get into an accident, I really don't think about that policy. I have homeowners insurance. Well, unless something happens to my house, I really don't think about that. But when you're talking about health insurance, you're talking about disability insurance, or even you're talking about life insurance, there are different choices that are out there depending what you want. And so when you look at health insurance, now health insurance, when you're talking something that could rock your finances faster than anything, are medical bills. And so when I explain this to people, I always say, you know, whatever income you make in your job, that's obviously important. You know, what is my pay? That's important. Does your job provide benefits? Because if your job does not provide benefits, then, and you don't have health insurance, benefits, health insurance, okay? If you don't have health insurance and then you wind up getting sick or something happens to you where you break something even, or you might even need a very common surgery, it doesn't even have to be life-threatening, you know, heaven forbid it is, then it could cost a lot of money. And if you don't have health insurance, it can totally rock your financial situation. So when you look at health insurance, what if your employer does not provide it? What type of health insurance is out there? Well, you have things called PPO and HMOs. PPOs are basically large groups, and this is where the more you have, the better. And actually, my employer is a part of a PPO, but it's our business, our school system, if you want to look at it that way, and we team up with a whole bunch of other school systems in the area, and now you got all these people that are paying in premiums, and the rates go down. So it's a large group. And basically what you're doing with a PPO is you're getting certain discounts, especially at local hospitals or certain doctors, or maybe you all have a drug card, that's a PPO. Now here's the catch. A lot of times a PPO will only pay not necessarily 100%. Normally insurance companies don't do that. My insurance company goes 90-10. So the insurance will pay 90%. I pay 10% of whatever is being done. You might say, that's good. Yeah, I'm not complaining. Here's the catch. They'll pay 90-10 in the network. And what that means is, okay, this list of doctors, these these hospitals, these specialists are who we'll go 90-10 with. If you go out of network, well then it's going to drop maybe to 70-30 and you're going to pay a lot more. And so we're not saying you can't go there, but you're going to pay a lot more of the cost. And so that's the thing about a PPO, and that's what people kind of don't like, because I can't just choose where I want. Well, you can, but it just might cost you more if you're out of network. Now, HMOs are different. HMOs, and with PPOs, you're paying a premium. I have to pay into that. Every month, I pay into that. So, well, an HMO may offer very low premiums, so you don't have to pay a whole lot to be part of an HMO. But the catch is you can only go to these doctors right here, and it's a very small list. So an HMO would be very concentrated, and what you're really trading off is, well, I don't owe you a whole lot of money every month. You know, I owe you some, but I don't owe you a whole lot. No, but you can only go to these doctors. You can't go out of network. You go out of network, you're paying the whole thing. So again, that's kind of where we're getting into the choice factor again. So then you also have things called HSAs. And you're going, oh man, Mr. Edmond, the letters, I know. An HSA is actually a health savings account. Now think about that, health savings account. And what that does is you put money back and for health expenses. And a lot of times, if you're saying, why don't I just put it in a savings account? A health savings account won't be taxed. So in other words, if I just know that every year I have a family, we have physicals we have to get done, there are checkups that I just know every year that I'm going to spend at least $2,000 out of my own pocket on health expenses. I just know it. Well, then I open up an HSA, and what they do is then I can draw from that account and pay off medical bills until the money's gone. Now the thing is, a lot of times with HSAs, they're going to say, make sure that this is an amount that you're going to be able to spend in a year. So it's not a savings account. It isn't where you're going to put $10,000 and just let it sit there. A lot of times they'll get specific and they'll say, now you make sure this is how much that you're actually going to need. So for instance, if I knew that I had a surgery coming up in the next year. And so then I just open up a health savings account. Prior to that, I put the money in there, it's tax-free, and then I can pay for medical expenses. So you have things like that when you're talking about health insurance. And it really depends upon, what do you need? Is it you? Is it a family? Do you have kids? What is it that you need? And so health insurance, in my opinion, is just as important as your income, because it can really damage you if you don't have it. So welcome to why in the United States the push has been lately for a nationwide health care plan, that this is something that everybody needs to have to protect themselves from really high medical bills. So aside from that, disability, again, something you can get at work. If you are hurt on the job, disability insurance will pay your bills until you're back to work. So now it again depends what type of job you have, but if I'm teaching at my school and the lights above me in my classroom fall on me and I fracture my skull, well, until I come back, that isn't my fault. It happened at work. So until I come back, disability would pay for my bills every month and everything that I need until I'm back to work and I'm getting my paycheck again. So that's disability insurance. And then finally, life insurance. There are different types of life insurance that exist. And really, and you may have not thought of this before, if you are single, you do not need life insurance. What would you need it for? Who are you going to give it to? There's really, what would be the purpose of having life insurance if you're single? So again, you might think, I never thought of that. So you're not getting that money. It's going to somebody after you're dead. So really, once you have a family, once you have a spouse, a family, people that you want to protect, now you're talking life insurance. The type of life insurance that you can get, there's term life insurance, which term means it's for a certain amount of time. Like I had a policy a few years back that was a 10-year term life insurance policy. So every year I gave them a premium, I paid into it, and then for 10 years I had X amount of life insurance. Then after the 10 years, that policy was done. And so then what could I do? Well, I could get a new policy, but now I'm older. The older you get normally, the more costly life insurance is, because you're getting closer to death, if you're understanding what I'm saying. Some policies require you to have a physical. They want to know everything that's wrong with you. And that could raise how much you're paying into your life insurance. So you have term life, you have variable, which is the rates are going to fluctuate based off of who you are and what you are, depending. Are you a smoker? That's something that they usually ask. How old are you? Are you a smoker? And then you'll have variable rates of life insurance, depending how much you want to pay. But then you also have something called cash value life insurance. And cash value works almost like an investment. You pay in a certain amount, and then you can draw off of that. It's kind of interesting. A lot of times they'll tell parents, you can start doing this with your children today. And it only costs $1 a month for your child to have life insurance. And the thought is, why in the world would I get life insurance for my 2-year-old? But what they'll sell is, well then, if you keep doing this, well by the time that they become, let's say in their 20s, well this can turn into a loan opportunity for them. They can borrow against their policy. That's called cash value. So I've paid in, and if I need cash or something, I can borrow against my life insurance policy if I have to. Cash value life insurance. So really what you're looking at when you're talking health, disability, and life insurance is you're protecting yourself from unfortunate things. Health, you're protecting against something bad happening to your health. Disability is protection against something bad happening at work. Life insurance is protection against something bad happening, like you're dead. So these things are really protection insurance. That's how I look at it. And so insurance is there to make sure that one big thing doesn't rock your finances or rock your family, life insurance, and leave them in a bad spot or leave you in a bad spot. So that's really what you're looking at with health, disability, and life insurance. See you next time.